everyone. This is Wilson Cole, and I'm going to move my microphone over here. I'm Wilson Cole with Adams, Evans, and Ross Backdoor Hires and managing partner of VLOC Global. I am joined by my lovely daughter Samantha and our general counsel and attorney for all of the companies. Hey Sam, how are you doing today?
I am doing great. How are you doing?
Doing fine. Sam, this is going to be a little bit of a different conversation, but I think it's amazingly important for the people that I come in contact with, whether they're clients or whether there's debtors. There's some opportunities out there that any business owner that is watching this video, they don't need to walk, they need to run and follow some of the stuff that we're going to talk about here. And I'm going to talk about the SBA EIDL loans. Now, everybody out there that within the sound of my voice probably is well aware of the SBA PPP loans. We're still, midway through this pandemic. It's, August of 2020. If wherever you're watching this, if you're watching this from a year from now and you didn't know these things were out there, you're going to be kicking yourself, because there is truly an opportunity that has never been there with the SBA. Everybody's familiar with the PPP loans. What a lot of folks aren't aware of is that they have access to SBA EIDL loans. That's economic injury loans, and they're basically for we used to live, or we still have a place down. I've always lived in, Samantha's always lived in Atlanta, and I've been up here the last 33 years, but I was originally from the northern Gulf Coast, which is hurricane territory. And if a hurricane comes in and it blows away all the businesses, the SBA would come in there, and if you were a business, you'd get these economic loans, and it was to make sure the businesses stayed in business. The U.S. has made these economic disaster loans available to all businesses here in the U.S. And they have also waived, and Samantha, I want to get with you on it, but they've also waived personal guarantees up at a certain point, and then they have waived security interest up to a certain dollar amount. And we'll get into that. But typically, when people think SBA loans, they think, oh my God, it's going to be a pain. It's going to take 4 months, and it's a death by 1,000 cuts. And, then you get to the end, you have to go through your bank and all of that. Absolutely not true with these EIDL loans. If you have been in business for, it may even be less than 2 years, but I've had, and I'm not one, we've always been self-funded. I'm not a big borrowing guy for businesses, but I have had some of our companies secure these loans, and some of them have been in business 5 years. Some of them have been in business 29, almost 30 years. And they all move through with lightning speed. It was about a 3-week process with very little input from me. And what they do is they verify that you've been in business. They may just glance over at your tax returns to just verify that the revenues that you're showing are actual, and then they approve it. A standard SBA loan is about 7 years. Now, this is not the EIDL loans. If you went in a normal time, Samantha, and you went to the SBA and you said, hey, I want to get a loan, they're going to make you jump through a million hoops, and then they're going to give you a loan that you have to pay back in 7 years. If it's real estate involved, they'll give you 10 years, and it's somewhere between 6 and 8%. These EIDL loans are 30-year payouts, 30-year payouts, 3.75% interest, and you don't have to make a payment for 12 months. Now, the interest is accruing, although you're not having to make a payment, so that is a downside. But a 3.75% interest rate is, in essence, you're getting a loan like you would on a mortgage for operating capital. Secondly, if it's under $25,000, they're not taking a security interest. If it's under $200,000 and you're a corporation or an LLC, they are waiving the personal guarantees. I want you to listen to that for just a second. They are waiving the personal guarantees. And that was from an act of Congress. Now, when you fill out the paperwork and you sign it, strangely enough, you're still signing a personal guarantee because it's the same form. But there are on the websites where it clearly states, act of Congress, they're waiving the personal guarantees. If they're waiving the personal guarantees, or if they weren't, they'd still be great deals. The fact that they are waiving the personal guarantees is just astronomically. It's just amazing. Samantha, from a legal standpoint, a security interest, whenever they say that they're going to do a security interest, and I talk about this as well with the UCC1, but from a legal standpoint, a security interest, what does that mean? What's the government doing?
They are basically putting their name, and depending on, again, because these acts of Congress have been changing on where their position is going to fall on the security interest, they're pretty much moving themselves up to the #1 repayment spot.
Yes.
U.S. government pretty much wins, whether it's tax liens or things like that, where, U.S. government's always going to take priority, but they're moving into where they get paid off before you can sell.
Yes.
You've got to clear it. It's going to be like if you're industrial and you have equipment, it's the same type of security, but they even get put ahead of whoever you're leasing your equipment from.
Yeah, exactly. They are the #1 creditor, and so if you go out of business and there's no assets, then there's no way to enforce it. But if you go to sell the company, then they would have to be paid off. It's a UCC1, how to become a secured interest, a secured creditor that we always talk about. The government's doing it. But here's the thing about the government is if you don't pay taxes, they're already secured interest, and they're already a silent partner because you're having to give them, depending on which tax year and laws you're going by. Right now, I think it's 20% for C Corps. They're already getting 20% of your profits, so they're already a partner. Now let's talk personal guarantees. And there again, if anybody's listened to me talk about how to set up your credit apps with personal guarantees, get your client on the hook to where if the company goes out of business. Samantha, plain English without attorneying it up, personal guarantee in business. So somebody signs a contract, the company owes it, and they sign a personal guarantee. What does that mean?
It automatically makes it their money too. They're on the hook. They've got to pay it back. They can't go, oh no, that was the company. The moment you sign it, it now becomes your bank accounts that can be garnished. Your property you hold personally can have liens put against. There is no separation between you and the company anymore.
So in essence, you are a co-signer, for a lack of a better word. So I always tell clients, if you've been in business or if you're doing business with somebody less than 2 years old, you definitely want to make sure that you get a personal guarantee. The government, by an act of Congress, is waiving under $200,000 the personal guarantee section of that. If I had a client that loaned out $200,000 without a personal guarantee, and Samantha, you and I have collected on a ton of accounts that have, but we've also seen a ton of accounts that have gone out of business. And when the client says, well, I know where the owner lives, we say, well, did you have a personal guarantee? And they typically say, what's that? As we just explained, we have to explain to them that they can't go after the owner. So companies will get up right now, the loans, and this may change because there's another wave of the loans coming. They're maxed at $150,000 right now. Prior to that maxation, I have a friend that was able to get over $500,000. Now he's personally guaranteed on it, but was able to get $500,000, and he took 5 and 6 year debt that he was paying $30,000 a month on. He owns restaurants, franchises. He was able to take short-term debt and now stretch it out to where he's going to create, tens and tens, if not hundreds of thousands of dollars, probably less than 100, but certainly multiples of $10,000 of profit every month just by being able to stretch out that cash flow because he's not having to pay back those loans as quickly. If you are a business owner, even if you don't need the money, I would suggest go get the money, go put it in, a checking account, savings account, go put it into a Vanguard treasury bond. The government's loaned it to you. Go put it in a treasury bond. The yields are about the same. and have that money there, because when we pop out of whatever this weirdness is, I think businesses' access to capital is going to dry up. And the times, I've always heard folks say, and the older I've gotten, and I've been in business 30 years, is you borrow the money when you don't need it. Companies will be able to have access to capital that they've never had, and it's going to be much cheaper than they've ever had. They will literally eliminate their need to ever borrow money again on a pretty grand scale. But also they're doing it with much reduced risk. If you're able to get a $150,000 SBA loan where they've waived the personal guarantee, if your company goes out of business, that's unfortunate. There's certainly going to be ramifications and all of that good stuff. Could that unpaid debt, could the government come back and say, hey, that $150,000 you have to treat as income because you didn't pay it back? Possibly, and that's, if your losses are big enough, they get absorbed in that anyway. But as far as a personal guarantee to where they can go file a lien on your house and things along those lines, they're just simply not going to be able to do. Never in the history of business has small businesses been in a position to borrow those sums of money with those kind of terms. And so if you're a client of mine, run to it. If you're one of our debtors that are having cash flow issues, go file for the SBA. Down in the show notes here, or if it's an article, if they take this video and create an article, there is the link directly to the SBA. It's not like we're getting a referral fee on any of this. I just want to get this out to our fellow business owners that it's there, because here's the other thing. We don't know what's going to happen third quarter, fourth quarter, get into next year, how things are going to bounce back. And I want to make sure that all of our clients are in good financial shape. And I want to make sure that even the companies that come in here for collections are in good financial shape, because small businesses are going to be the ones that have to bring this economy back when we get past from this. So I'm off my soapbox, but if you've ever, it is literally a 10-minute to 5 to 10-minute application. Click on the link below, and if you're listening to this, if you put in SBA COVID SBA loans or idle loans, it will pull up the same thing, I'm sure. Now, if you're in 2021, 2022, this opportunity is probably already passed. But Sam, any closing statements?
I think just the other thing, and this is always going to be the attorney side of me, is keep your records in line.
Keep your records in line and screenshot the part where it says personal guarantees are being waived, because the SBA has done, and I think Samantha was reading an article, the SBA has processed more loans and given out more money in 4 months than they have in 10 years. And that's before this next Fusion cash and infusion. I mean, they literally may give out more this year than they've given in the entire lifetime of the SBA. But I do agree with Sam. Keep the records. Take a screenshot of the SBA site where they're waiving the personal guarantees and all of that. But that's certainly my recommendation. Sam, thanks for joining us, and we'll see you next week.